What is going on, everyone? Welcome back to Sin City Crypto. My name is Dave, and I'm joined with Robin. And today we are talking about the new CPI numbers coming out. We're going to take a look at how the stock market reacted. We're going to look at some charts, and we're going to look at how the CPI breaks down. Let's not waste any time. Robin, you got some numbers for us, I believe.
Yes. So taking a look at the Labor Bureau statistics, the original source of the CPI numbers, we have both what you could consider good numbers or bad numbers, just depending on how you want to unpack this. One, we are in a bad situation because target inflation is supposed to come in at 2% or less. That is where the Fed is trying to get inflation down to. We are at 7.7%, almost 4 times away from the ideal number. So 7.7 is lower than we were expecting by 0.2%. And also the core inflation is also more favorable this time around. So all items, the total here is 7.7. Food at home is at 12.4%. This is your grains here. Or wheat, 15.9. So your baked goods and cereals, and meat is coming down. Dairy is going up. Fruits and vegetables are under 10% still.
So just to specify, Robin, yellow means it's up from last month or year over year, right? Is that how you highlighted them?
No.
Okay.
I just highlighted some numbers that are standing out. Now, I know that a couple of these are. I know that meat is down. And actually the grain was actually higher before. It was over 16%. So taking a look at energy, which is one of the biggest factors with the CPI number. CPI number month over month has gone up 0.4%. So, you know, you can take that with a grain of salt or with a grain of grain. Now, energy is 17.6%. Energy up 19.3%, and these are energy commodities. This is the full basket. The one that weighs the heaviest, obviously, is oil at 68.5%. Natural gas up 20%. We know why that is. And this all items less food and energy. This is the core CPI. This is something that the Fed keeps a close eye on. This is coming in pretty favorable as well. This was supposed to come in at 0.5 or 0.6. So this was expected to be higher. Now,
you know, it's sad that we look at 6.3 core inflation and we're saying favorable, right?
A lot of why we're up month over month is because of housing and energy costs. So housing is hitting some crazy all-time or high since the 1980s as far as the rise in prices in just 1 month. Now. To take a look at here's another chart. This one also combines a few interesting metrics. You have food at work plus school is up 95%. So the cost of feeding yourself when you're not at home and you're at work or school is almost 2 times what it was a year ago.
Year over year. Okay.
Yeah, and eggs are also up. Airline is up 42%. This is actually down from last month, but still crazy high. Obviously, this is weighted heavily by the cost of jet fuel. And then you have, butter, margarine. I kind of went over these, but these just kind of highlight some of the items. So the annual rate is down. The all-time high, or not all-time high, but the high here over the last 12 months for CPI was 9.1. So we are trending in the overall direction. 7.7 is where we're at now. So could give a little bit of ease when it comes to the expectations for the Fed's interest rate hike down the road. And if you're watching this wondering, why are we talking Fed and interest rate hikes when this is a cryptocurrency channel? Well, they've been pretty damn correlated. When I say pretty damn correlated, almost 1 for 1. As the Fed increases interest rates, you are taking steam out of the economy in its entirety. That includes crypto assets as well. So as you get more wealth in the system, more transaction, more volume, more people are borrowing because of the interest rates coming down, then that's a good thing. I'm done with the chart there, Rocco. Now, what do you think about all of this, David? Do you think that because we're trending in the right direction that we might get a pivot? And I say that with hesitancy because in the last Fed meeting, Jerome Powell did come out and say that a pivot was not on the table.
Right.
So do you think that perhaps the narrative might even change from what Jerome Powell was saying because we came in under expectations? Or do you think that's simply the fact that we are so far away from our target goal, nothing's going to change, and that maybe 0.75 is still on the table for next month as far as a target interest rate hike?
Before I tell you what I think, I want to show everyone what investors and traders think. So this is from the CME. So right now the target is at 375 to 400. 85% of people who took this poll think that we're going to have a 50 basis point hike, so 0.5% rate hike in the December 14th FOMC meeting, which, by the way, here at Sin City Crypto, we are doing a very special episode of our live show for the FOMC meeting. You are not going to want to miss it, December 14th. Put it in your calendars, with only 14.6% thinking we're going to get a 75 basis point rate hike. I think we're going to see a 50 basis point rate hike. Jerome Powell has said numerous times, at some point they're going to have to pause, because these rate hikes, it's not like they raise the rates 50 basis points and right away it takes steam out of the market. It takes time to make its way through the market. So what I think we're going to see 50 basis points. Of course, just my opinion, 50 basis points in December. We're going to see a pause for all of Q1 of 2023. And then Q2, April comes around in 2023. We're going to get reevaluations. If CPI numbers are below 6%, we might maybe see an indefinite pause or even a pivot. But call me a conspiracy theorist. But what I think is going to happen is when next month's CPI numbers come out, which is either on the same exact day as the FOMC meeting or right around that time, you're going to get a call from President Joe Biden to have Jerome Powell come into his office, which we've seen happen when Donald Trump was in office. We see it happen when Barack Obama was in office. And I think they're going to sit him down and say, look, Jerome Powell, we believe inflation, we've got control of it. Let's get the market back up and running. Presidential elections are only a year and a half away, technically 2 years away. So that's what I think is going to happen. But I definitely think 50 and then a pause for 3 months. What are your thoughts, Robin?
You don't think they're going to raise at all after next month?
So 50, and if CPI numbers come lower than 7.7 next month, I think we'll see a pause.
I think they're gonna stay the course. At least in the tone that Jerome Powell had, we're gonna stay the course for raising incrementally every single meeting until we get down to at least 3%. And whether or not it's a 50 basis point or a 0.25, I think that we're not going to have a meeting, period, end of story, until it's at least 3%. And it might be 0.25 every meeting until then, but that's just my assumption. Now, how fast will we drop? That is the question. How fast does it take for a CPI? Remember, this is a year-over-year statistic. And so at some point when we started getting inflation up into the 7 and 8 percentile range, before that, it was a lot. You're taking in, we had 2% from the year before. You had 3% from the year before. Now we're going to be coming into a position where inflation 1 year ago from said month in the future will be, hey, it was 7% last year. And so now we might see reversal, and then it'll be a lot easier. So I think we got at least 3 or 4 more months before we get to, if you just look at year over year, what was the CPI 1 year ago? And until those numbers kind of play through the system, I don't think we're going to get a pullback for another 3 or 4 months. So for that reason, I think 0.5, 0.75 next meeting. And then from there forward, you're going to get an incremental rate increase each meeting until we get to 3%. Now,
let us know what you guys think in the comments.
I will say, though, as I mentioned when we came in, one of the biggest metrics that did increase on the CPI number we just got in was the mortgage number. So taking a look here, mortgage rates fell sharply to under 7%. So the 30-year fixed rate mortgage was at 7.22 and fell to 6.62%, 60-point rate drop, just basically off of these inflation or these CPI numbers. So this could bring down dramatically the price of or the number, the CPI number, if you were to get home prices to fall because the 30-year mortgage rate price is also coming down as well. I don't know. Maybe we get more volume, maybe more home buying, maybe competition can spur the market to drop prices a little bit. I don't know, because right now we're kind of at a stalemate when it comes to the housing. And yeah, that's all I got there, bro.
All right, so to kind of conclude this video, let's take a look at a couple charts, see how the markets reacted to the CPI headline news. Let's see where the dollar index is, right? The Dixie, which you're not familiar with the Dixie, it measures the dollar against a basket of other foreign currencies like the Chinese yuan, the Japanese yen, the British pound, obviously the euro as well. So the Dixie, although, it's good, it's going down, right? It peaked out at about $114. It's now sitting at $108, but on the daily chart, we are printing a very bearish, well, in this case, typically it would be a bullish pattern being a bull flag, but we don't want the Dixie to go up. We want the Dixie to go down because every time the Dixie shoots up, guess what? Risk on assets come down, which Bitcoin and cryptocurrency are considered risk on assets for the time being. And so with this bull flag we have on the daily chart here, we should see Dixie rip to the upside if this pattern completes. And if we try to measure this move here, we're looking at a 3% move to the upside, which would put the Dixie right around the dollar or $114 range again, which the last time, and if I throw Bitcoin's chart on here, just so you guys can kind of see how Bitcoin reacts, we'll do a new price scale here. So you can see in comparison, whenever the Dixie shoots up, Bitcoin plummets. And you can see as the Dixie has fallen today, Bitcoin has shot up. And so these two are correlated, right? Along with the stock market. And well, let's take a look at what the stock market did. Dow Jones up 4%, up over 1,000, right? You see this giant gap from when the market's open today. We do expect gaps to fill, so expect some volatility moving forward. As far as the, so up 3.4%, 1,100 points. NASDAQ up almost 7%, crossing over $11,000. And here is the NASDAQ. Again, everything in the traditional markets did gap up. And again, gaps do tend to fill, whether it's to the upside or downside. And I would expect a $10,733 NASDAQ in the coming couple of days or weeks ahead. Same thing with the S&P, guys, up 5%, over 200 points. And so while Jerome Powell would like to take steam out of the market, looks like steam is entering the market. So will that play a role, or will that be weighing on his mind when he decides whether to pause or to continue with 75 basis points? And the final thing I want to take a look at is crude oil. We might be seeing some bullish pattern forming on the crude oil chart. You can see here, it looks like we might be in the process of forming a head and shoulders pattern, which does break to the downside. And with oil, obviously, we do want it to break to the downside. So if this continues and we do form, we're looking at a break around $84 to the downside. And the move we could expect to see, we just take the depth of the head here. We should see about a 6% move to the downside, which obviously if prices of oil goes down, so does prices of gas. 6% move would put us right around a sub $80 per barrel of oil. So things are looking good in the short term. In the long term, though, macro is still not where we want it to be, but we will work our way through it. That'll do it for the video today, guys. Thank you so much for watching. Make sure to like the video on your way out, subscribe to Sin City Crypto, and come join us Monday through Friday at 10:30 a.m. Pacific Standard Time. On behalf of myself and Robin, thank you so much. We'll see you in the next video.